This is episode number 100 of the Rohit Radio Show. 100 episodes means 100 weeks. So we have come a long way. Anyways, coming back to the episode. In this video, I want to discuss, can candlesticks be used for investing? Now, candlesticks trading, I have a lot of courses on Udemy that I have put up. You can check it later. I will put the links in the description box. You can do my courses on Udemy regarding candlesticks. I have more than 55 hours of video training that I have put there. So the question in this video that we are asking is, can candlestick techniques be used for investing, not trading? And the answer is yes, and I want to discuss some points here. Number one, let's say there is a hammer pattern which is confirming prior support on a weekly chart. So basically the hammer is a candlestick pattern which is a bullish pattern. And you see that pattern on the chart of a stock, and it's a weekly chart. So every candle represents one particular week, and this hammer is confirming a prior support area. So now if you're looking at this company, you have read the balance sheet of the company, and you feel that the company has reached a price level where the valuation seems attractive, you feel that this is a bargain stock, then looking at the hammer, it should give you a signal that this is the right time to buy. So fundamentally and technically, both the signals are confirming each other. So you can make a decision to buy the stock at that particular price point. So the candlestick is giving you that additional confirmation. Remember, candlestick techniques, when you are using for investing, use it as an extra confirmation. Don't use it as a sole decision-making tool. No, your sole decision-making tool should be the balance sheet of the company. When you study the company, when you study the balance sheet, profit and loss account, cash flow statement, when you do the qualitative analysis, that's the decision-making process. That is where you decide that yes, you want to own the stock. You take extra confirmation from the candlesticks. Number two, let's say there is a bearish engulfing pattern on a monthly chart on a stock that you own. So let's say, for example, you own a stock like Nestle, and you see that there is a bearish engulfing pattern now on a monthly chart. Now, bearish engulfing pattern is an extremely powerful bearish signal, that too on a monthly chart. So the higher the time frame of the chart, the more potent is the signal. So if you see such a pattern on a stock that you already own, so for example, you have Nestle stock in your portfolio and you see this pattern on the monthly chart, in such cases, what you could do is either sell off the entire position, because you know for the next 5-6 months the price is not moving above that pattern. So you can sell off and free up capital and invest that capital in some other business which you feel is more attractive in terms of valuation. Or you can lighten up on your position. Maybe you can sell off 50% of the position and keep the remaining 50% because you want to stay invested in the business for the next 10-15 years. So these patterns can give you a hint as to what the market is likely to do over the next few months. So it's very important. Number three, let's say the price is near resistance on a weekly chart for a stock that you want to buy. So let's say you want to buy Asian Paints, and Asian Paints, the price is at a prior resistance area, and that too on a weekly chart. So you know that the price is near the resistance. So what you have to do is you have to wait till the price closes above the resistance. What if the price hits the resistance and starts falling down? So wait till the price breaks that resistance point, goes up, closes above that resistance, and then you can make your purchase. Of course, if you want to hold the stock for the next 15-20 years, it doesn't make any difference, right? But these kind of patterns or these kind of technical signals can tell you, or they can pinpoint the exact entry points. Even if you have done your fundamental research, the technical analysis can aid you in doing your investments at the right time. Number four, the timing of the sale of a stock that you own. So let's say you own a particular stock. Let's say you own Infosys, and you have decided that Infosys is overvalued now and you want to sell the stock. So when do you sell? Okay, what's the correct time to sell? If the stock has been moving up and up and up, that is why it has become overvalued, right? So if the stock has been moving up and up and up, there will come a candle which gives a bearish sign. That's the correct timing of sale. Maybe you see a shooting star, maybe you see a star, maybe you see an evening star, maybe you see a dark cloud cover. There are various patterns which you can learn in my courses on Udemy. And if you find one of those patterns, that is the exact time where if you exit, you are booking the highest profit. You are extracting everything that you can from that position. Anyways, you have decided to sell, so why not sell it at the right time? Number 5, there is something called as a rising window. Rising window is like a gap up opening. Rising window becomes a very strong support as per the Japanese candlesticks techniques. You can use the rising window to buy, because if you are thinking of buying a particular stock because you have done your fundamental research on the company. However, if you have done the fundamental research of a company and you are still not sure whether you want to own a stock, what you could do is, if you see a rising window, you could buy a few shares, maybe 10 shares, just to own the company. Because unless you own the company, you will never learn, you will never be curious about learning more about the company. So when in such a scenario, when you are having some doubt in your mind and you see a rising window, buy at least a few shares. That will keep your interest in the company. Continue doing your research, and when you feel confident, then you increase the position size. Number 6, lightening of a long position. Let's say you are in a long position. You already bought a stock and you are sitting on a sizable profit. Let's say it has gone 4x in the past 7 years, and now you want to lighten the long position. You have already made 4 times your money and you want to extract the capital that you have originally invested in the company. So what is the right time to lighten that position? Lightening means you are not selling the whole position. You are reducing your position size. Again, that timing can be given to you by the monthly and the weekly charts. And number 7, buy on 50% retracements. There is something called as 50% retracement. So if the market rallies very fast, it will come down to a 50% level and then it will rally again if it's a bullish market. So if you like a particular company and you make a decision to buy based on your fundamental research, but when you go to buy, just have a look at the chart. Suddenly, if you see a long white candle, then it makes sense for you to wait till the price retraces 50%. Then you make the purchase. You will get the stock much cheaper. Yes, you are going to buy the stock anyways. And if you are going to hold it for the next 10, 20 years, it really doesn't make any difference. However, if you can get that extra 50%, that extra return, that might increase your compounded annual growth rate over the future, over the next 10, 15 years. Even 1% makes a huge difference to your overall portfolio return. So these are certain pointers that I wanted to give you. Generally, if you are combining candlesticks techniques to your investing, I would not recommend using the daily charts because it's very narrow way of looking at things. Look at the weeklies and the monthlies, especially the monthlies. For value investors, a monthly chart is extremely important. Imagine you want to buy a stock and you have a bearish engulfing pattern on the monthly chart. Almost guaranteed that for the next 5-6 months, the market is not moving, or the market is either going lateral or it is going down. There is a 80% chance that is going to happen. So why would you buy the stock? Does it not make sense to wait for the price on the monthly chart to close above the resistance or the high of the bearish engulfing pattern? When that happens, you can pull the trigger. Okay. So yes, you can use candlesticks for your investing. Thank you so much.